Welcome back. Well, in the world of commodity, all eyes are on the OPEC meet, which is underway. And remember, the big meeting between the OPEC and its allies is scheduled for December 6th, wherein most of the street is expecting some sort of production cut to come through. To tell us more details, we are now joined by Manisha Gupta. Manisha, good morning. Over to you.
Well, thank you so much. As you said, yes, the markets are anticipating a 1 to 1.4 million barrels per day on 6th of December, and that is one of the reasons that you have seen support continue for the crude oil prices. The other reasons, as we have been talking in last 24 hours, clearly have been the G20 truce between US and China. Markets also are looking at the reduction cuts that Canada has announced from Alberta. That also has added some premium to prices. And then, of course, it has been the US dollar index, which has softened a bit versus its peers. That is supporting many of these dollar-denominated commodities. So crude oil prices seem to be taking support from that as well. So after that 5% gains that we saw yesterday, we have seen some more follow-through buying come in for the Asian markets right now. Apart from that, it is the metal space which also has seen strength for a third straight day today. Yesterday, overnight, we saw copper prices gain up by 2%, zinc was up 4% as well, and there is some more buying that we've seen right now. Apart from the US and China now putting a halt to tariffs for the next 90 days and with the conviction that there would be fresh conversation which would be on the positive side, it also has to do with the Chinese data where we have seen the export numbers decline, yes, but the factory output numbers have been slightly on the positive side, better than what the street was estimating, and that's taken the metals higher. In any case, the zinc fundamentals are strong because the LME inventories are the lowest since 2008, so a decade low, and that continues to support zinc prices. Copper is trading at a 2-week highs as well. So yet another day when we have seen the metals as a sector open on the positive side.
Right, Manisha, thanks a lot for that. So we will definitely keep an eye out on commodities as well as crude. But let's take a look at the futures and options space yesterday. While the Nifty petered out most of its gains and ended mildly higher, just about 7 points, there was positive cues coming in from the FII perspective. There was about a 300 crore worth purchase. The domestic institutional investors sold about 800 crores in the cash markets. But in the index futures space, the Nifty futures premium, the live intraday indicator of sentiment, that one moved to about 40 points. This compares with 24 points. So this is perhaps on account of two reasons. The first one is that there was a fair amount of purchase, and second, as we go into events, the premium increases as on account of the increasing IVs. Keep an eye out on FII net buy of about 400 crores, nearly 2 long contracts added in index futures per short contract added, about 9,000 longs added by the FIIs, and with that their long exposure now stands at 52%. In index options, there was the positive data coming in. While there was a sale of close to around 1,200 crores, the FII sold more puts than calls, and that's telling you that at lower levels there is a fair amount of support, and 11,000 is the mark that we will keep an eye out on, where we have the maximum open interest in terms of calls. That could be a bit of a psychological hurdle. At the lower level, of course, the 200-day moving average would be a fair amount of support. In terms of active options, they were active way off the current market price or the current Nifty, and that's because of the lot of events that there are. So 10,500 put, 11,500 call. A lot of the street is playing for binary events, but short point, it is positive cues coming in from the FII space.
Okay, so positive cues coming in from the derivative space, but on to the bullseye corner now. Our contestants this week, Pankaj Jain, Samit Chavan and Jay Thakkar, are battling it out for the strongest portfolio. Let's hear their picks for day 2 of the week.
Our first call is a buy call on Federal Bank for a target of 90, stop loss at 81.8. Second buy would be on Precision Wires for a target of 278, stop loss at 228. Third buy would be on PVR for a target of 1658, stop loss 1488. And final call would be a buy call on Britannia for a target of 3280, stop loss at 3038.
First buy recommendation is on All Cargo. One can buy All Cargo for a target of 111.90 with a stop loss of 104.20. The second buy recommendation is on SRE Infra. One can buy SRE Infra for a target of 35.40 with a stop loss of 31.85. The third buy recommendation is on Ramco Siemens. One can buy Ramco Siemens for a target of 632 with a stop loss of 592. And a final buy recommendation is on KSCL. One can buy KSCL for a target of 562 with a stop loss of 522.90.
First one is long call on Motherson Sumi. Stop loss at 162, target price of 173. Second is a long call on Rain Industries. Stop loss at 133, target price of 142. Third is again long call on HOVS with stop loss at 168, target price of 177. Fourth and final is long call on Union Bank with stop loss at 79, target price of 84 for the day.